Starting your own business can be an exciting time, but what type of business entity should you use? Well, there are advantages and disadvantages to every type of business structure. Today I'm going to talk about the three main types of business entities: sole proprietor, partner, and corporations, as well as a couple subsets of the corporations and what makes these different, and, well, things to consider as you decide the best entity, the best structure to use without writing a big check to Uncle Sam at the end of every year. Now, please note, I am not a CPA or a tax attorney. I'm just providing you with some general knowledge and lessons learned over time. The key to consider is your needs, and then simply match them to the business entity that makes the most sense. I'm Sue Krautbauer, and I've been an entrepreneur for most of my life in one way or another, from owning my own boutique marketing design firm, complete with a passel full of graphic designers and large format graphic printing lab, trade show exhibits, etc., to my current business mentoring gig. I've been there, got that, done. Wait a minute. Been there, got that, done the t-shirt, and I've earned an advanced degree from the Business School of Hard Knocks. And my passion is to help 30 to 50 aspiring founders and entrepreneurs that want to be their own boss. They want to open up their own business, and I try to help them avoid some of the pitfalls and potholes I've stepped in and learned from all those lessons over the past 25 years. So let's look at the most common structures for small business owner. First, sole proprietorship. It usually consists of one person, aka sole. With a sole proprietorship, legally, you have no separation from the business. You would report the business income as personal income, and the net profit or loss is computed on Schedule C in your own personal 1040 return. Now, the advantages are minimum legal restrictions for you and the business. Disadvantages include personal risk that you take, including all of your personal property and assets, as well as the fact you can't bring in additional owners or outside capital, any type of investors. Partnership. This is essentially the same as a sole proprietorship, but having two or more owners that function as a trade or a business. Sole proprietorships and partnerships make the best sense for smaller service businesses, with little debt, and those that have limited assets as well, personal and professional. The advantages of a partnership is that it's easy to create, and it allows you to have two people in the business with skills and expertise that complement one another. But there's a flip side to the coin. Partnerships are easier to get into than they are to get out of. And you're liable for the actions of the other partners. The income and expenses flow through to the partners, and that income is taxable to both or all the partners. You are liable for all partnership debt as well, regardless of who incurred it, aka approved that debt. If you're thinking of a partnership, there must be a huge level of trust and integrity between the both of you, or three or four. Limited liability corporation, an LLC. A limited liability corporation separates the owner from the debts, liabilities, and legal judgments against the business. In practical terms, it also provides a degree of liability protection for the LLC members. And in theory, any claims against your business could not result in you losing your personal property or your assets. That's what I have at LLC. But do your research, because that differs. The rules for LLCs differ from state to state. The advantages is that an LLC avoids certain S-corp restrictions and avoids double taxation on profit. For tax purposes, and LLCs handle kind of the same as a sole proprietorship or a partnership. Your business income is reported as your personal income. It's smart, though. Consult an attorney to set up your LLC in a way that the courts can't or don't lift the veil of separation between your corporation and your personal assets. C Corp or C Corporation. From a legal standpoint, a C Corp is similar to a limited liability corporation because it's a business entity that carries its own legal status. Your personal assets are safe from your business-related issues. However, here's the biggie. For tax purposes, the business is taxed separately from personal income. Well, what does that mean? The business itself is taxed on profits. Shareholders can pull cash from the company, but those are usually taxable dividends. You would also be taxed for whatever salary or bonus you pay yourself and receive. That's considered personal income. Now you get it? Corporations and limited liability corporations make a lot of sense for owners that have a real risk of being sued or of creating a lot of business debt. It also protects your personal assets like your home or your personal savings. But the big disadvantage is that double taxation on profits that I talked about, dependent upon different states and federal regulations, but I'm sure you will agree. Corporate tax rate in the U.S. is brutal. So, unless you want to raise money by issuing stocks and bonds, the corporation structure is probably not the most beneficial choice for you, the C Corp. Now, there's a subset called an S Corporation. Oh, lordy, right? Why do folks choose an S Corp versus the regular C Corp? Because income and expenses flow through the shareholders and Uncle Sam taxes it much like a partnership rather than a C Corp. And while it provides the same asset protection as a C Corp, the biggest reason people choose an S Corp is to avoid that double taxation. Why? Because profits passed through to you are not subject to self-employment tax like they are in, say, a partnership or a C Corp. Nonprofit. If your business will rely on donations and carry out a mission or purpose that serves the community, you might want to consider taking a look at a nonprofit corporation. The income received in the form of donations is not typically taxed, but there's a host of different types of income streams. Donations for a nonprofit, they're restricted and unrestricted. There's grants, there's in-kind donations, and you have to track and be careful to stay in compliance and to keep your nonprofit status of all those different streams of income or revenue. You will also file a 990 each year with specific reporting requirements. Best practices also include paying an independent auditor each year to review the books that have been created by your CPA or yourself. Cooperative. I'll admit this format's the one I'm least familiar with, so I'll keep it brief. A cooperative is very similar to a partnership or a limited liability corporation. There are multiple owners with liability protection, but income is taxed as personal income. Cooperatives are all about having equal owners, one person, one vote. All income and benefits are distributed equally, regardless of the participation. Did I blow your mind with all the different types of businesses? Yikes, I know. But setting up a business doesn't have to be difficult. Choose the structure that seems to best suit your needs. Some of the forms of business are more complicated and expensive to set up than others. Check out all of the details before making your final decision. And don't take this step without some expert help from a licensed, reputable business attorney. Making the wrong decision as you begin your journey as a founder or an aspiring entrepreneur can have long-term impact on your own personal finances as well as the business health and viability. Speaking of business health and viability, a good entrepreneurial idea is simply a hypothesis until you've properly set up and launched your business. Unfortunately, you don't succeed in business by just completing a list of tasks, nor will your business be a success just because you think it's a good idea. My Assess My Biz assessment, that's a lot. My Assess My Biz assessment and live workshop is created to give you, a potential new business owner, answers to these questions. What will make or break your business? What determines if it will be a success? What business elements are still not fully baked or fleshed out and need more preparation, and without it could make or break your business. My free workshop is right around the corner. So if you really want to know if your business is going to succeed before you get started, click the link and get registered as soon as possible. Thanks for letting me talk about the alphabet soup of business this week, and we'll see you next week.